Welcome back. This is Chart Busters, and the stock that has been busting the charts all through this year, Dabur, that is the one on our radar right now. The stock trading at a record high, up almost 40% this year, and most of that has come just in the last couple of months after a strong first quarter results. Brokerages too positive on the stock after the company held its analyst meet a couple of days ago. To discuss this and more, we have with us the CEO of Dabur, Mr. Sunil Duggal, the man of the moment, as well as joining us in the studio, we have Sambamoorthy, the VP Research and Consumer Analyst at Motilal Oswal Financial Services. Thanks a lot, gentlemen, for joining in. Mr. Duggal, thanks a lot, as well as Krishnan. Thank you for joining us in our studio. So first we'll go to Mr. Duggal himself. You know, there's a lot of excitement with regards to your strategy going forward in the small brands. The one line that stood out from your analyst meet was your strategy to grow small brands, where you will invest disproportionately in 3 brands every year to grow them a lot more. So what are the 3 brands that you've selected for this year? How much money are you going to invest in them, and what revenues do you expect from them?
This year we've selected actually 2 brands, not 3, because there's not enough time to roll out 3. And the 2 brands which we selected are Honitus and Lal Tel. These are the brands which will see a disproportionate amount of support and hopefully a disproportionate amount of delivery in terms of sales.
So what kind of revenues do these 2 brands do right now, and what do you expect them to do going forward?
See, Lal Tel does around 100 crores and Honitus around 50. I don't have precise numbers here. We're just testing the scalability of these brands. So in a sense, it will set the context for our future strategy. But we will be putting in significantly enhanced inputs behind these 2 brands this year. And let's see how the brands respond. And then maybe we'll have to iterate a little bit, see what's going right, what's not going right, before we get the final picture, which we can then extend to the other brands.
All right, Mr. Duggal, sir, you've guided for double-digit volume growth for the next 3 quarters. If you could give us a sense about from which product will it come? From honey will it come from, or will it come from hair care?
I think it will be secular. No one product can drive a double-digit growth. It has to come across all segments. Of course, there will be some brands which may not grow as fast as the others. So it will come from both the HPC.
Which ones do you think will not grow as much as the others?
It's hard to say, but you know, we have a couple of brands in oral care, one brand in oral care which is not doing too well, and we have plans to revive it, but might take a little bit of time for that to happen.
What brand is that, sir?
But other than this one brand Dabur, which is last 2-3 quarters not been growing. And then of course a lot depends upon the winter season. If the winter is very mild, we may not see great growth happening in our winter portfolio like Chyawanprash, etc., because that is dependent upon the temperatures. But other than that, I think we'll see growth everywhere. If you saw the first quarter results, you saw a very secular growth happening out of HPC, HC, and most importantly food and beverage, which was lagging behind in the earlier quarters. So I think that the trend will continue. As of now, I don't see any soft spots in our portfolio other than 1 or 2 brands which are not very strategic in our scheme of things.
All right, you spoke about the brand which you are not expecting to do too well. Which is the brand do you think will outperform this year?
Well, I think Red continues its great trajectory. Hair oils is a bit of a surprise. We're seeing great growth in hair oils. Beverages has revived very strongly after we put in extra inputs in the first quarter. You saw around 25% growth in beverages. So now some of these will continue to grow very fast, some of them may not. That, like I said, depends upon a multitude of factors. But overall, double-digit growth can only happen if a very substantial part of your portfolio fires. If it doesn't, then that kind of growth is unlikely.
Okay, all right. Mr. Duggal, you know, we have a special guest with us in the studio. He's going to give us his view on the FMCG space, but he also wants to put a couple of questions across to you. Krishnan, go ahead.
Yeah, hi Sunil, sure. Just one query. Amla is a large category for you, and you've seen some market share losses over the last couple of years. And it's a fairly significant brand for you. So what's your strategy there? How do you hope to recoup market share from these levels?
See, the good news from the Amla and its collateral hair oils front is that we've been actually rapidly regaining share. We are close to our peak levels, and the share gains actually have been quite dramatic, and I expect them to continue. We've re-engineered the whole strategy behind Amla, put in flanker brands like Sarso Amla, etc., and that's working very well for us. We're also getting great growth from the coconut portfolio, both Anmol as well as the Anmol value-added products. And that was a very small part of our hair oils business, but now it's assuming some significance. And it's growing extremely fast on the back of market share gains. So hair oils is really the star in many ways, because it's a large portfolio which has been, in a sense, not growing as much as it should have, but for the last 3 or 4 quarters, it's shown strong resilience and growth.
And Sunil, you've shown very strong growth in rural wholesale. I believe you grew by 24% in Q1. The base is weak going forward as well. How do you see the prospects? Do you see a possibility of strong growth for the rest of the year as well?
Yes, I think it will continue, because one of the reasons it is growing so fast is that the urban wholesale is declining. And urban wholesale is now just 22% of our business. Around a year ago, it was 24% of our business. So the issues related to GST, demonetization, and now the e-way bill have had a huge negative impact on urban wholesale. We were prepared for this. We saw it coming, so we put in investments in rural wholesale. We extended the super stockist network. We cleaved the whole portfolio down the middle into healthcare and personal care, and added a few hundred more people to drive that. And all that has paid very good dividends. So therefore, the rural wholesale is now ahead of urban wholesale. It never was the case in the past, and therefore our rural franchise is growing, quite strongly.
Right, Mr. Duggal, we'll have to ask you to hang in for a bit. Just a second, we're getting some breaking news. With that, we'll step into a short break. Request Mr. Duggal as well, Krishnan, to stay with us. We will continue our conversation just after this very short break. Stay tuned.
Well, we are still in conversation with Mr. Duggal, and we have Mr. Krishnan as well, who's with us in the studio. So let's take that conversation forward, gentlemen. Well, Mr. Duggal, coming across to you, your chairman had earlier spoken of your entry into the food segment. Any development there? What category are you looking to enter? If you could give us a sense about some launch pipeline as well. And just throwing this at you, will you buy Horlicks or Complan?
We are not in the race for any of these brands at the moment, because I think we have our own new product agenda and perhaps other types of acquisition targets which are more in the nature of emerging categories rather than, let's say, very mature categories in which the malted food space is. As far as our foods initiatives are concerned, we at this point in time expect it to be largely restricted to the beverage space. And within beverages, we'll seek opportunities, within the fruit-based beverages, of course. We'll seek opportunities in value-added products which deliver healthcare benefits and are a little bit futuristic in terms of the composition rather than commoditized. So going forward, I won't rule out further foray into foods, but we do have a culinary business which is small but definitely shows potential. Whether we'll invest significantly behind it at this point in time, the answer is probably no. In the future, I don't have any clear answer to that issue.
Mr. Duggal, a yes/no answer before a question before we let you go, sir. Has competition from Patanjali come off?
Well, generally, disruptive competition has come off. I think that shows in our growths in areas where the category growths were impacted. They are back to normal now.
Okay, all right. Thanks so much, Mr. Duggal, for joining in and filling us in with that. Well, Krishnan, final word from you. What about United Spirits, United Breweries? You're confident on, you're positive on those stocks?
We are positive on both. We like United Breweries better. The consistency of earnings has been better, and they've been delivering on their targets.
That was quite a segue, from Chyawanprash go to beer.
No, I just want to ask, it's a Friday, right? You need to get that Friday move in.
All right. Thanks a lot, Krishnan, for joining us in the studio. Thank you, Mr. Duggal, for giving us your outlook as well. With that, it's a wrap on Chartbusters. Stay tuned to CNBC TV18 Trading Hour. TV18 Trading